All right, let's just jump right into this explainer because honestly, a massive tectonic shift is happening right in our own backyard. If you look at the cranes and the sheer scale of the new West Harbor waterfront project down in San Pedro, it becomes pretty obvious that this isn't just a facelift, it is a full-blown economic earthquake. And that brings up what is arguably the single biggest question for any commercial property owner or small business in the South Bay. Are you positioned for the spillover effect? Today, we are breaking down the exact Wall Street insider strategies that sophisticated syndicates are using right now to capitalize on this local transformation. Right now, it feels like everyone is just totally distracted by the shiny new restaurants and entertainment coming to the harbor. But listen, if you own an underutilized or even a vacant retail asset in downtown San Pedro, your property value is ticking upward every single day, whether you actually realize it or not. The harsh reality is, if you're waiting for the official ribbon cutting to finally figure out your strategy, institutional buyers are already circling. And frankly, they are banking on you being asleep at the wheel. So before we go a single step further, you really need to arm yourself with the right data. I highly recommend opening a new tab right now and heading over to toptiercommercial.com. You have to see exactly how this waterfront transformation impacts your specific address, literally block by block. They offer a localized cap rate tracker, which is essentially this amazing tool that shows you your property's real-time return on investment potential. Don't just rely on what your neighbor thinks your building is worth, right? You need to get the actual, hard institutional data at toptiercommercial.com. And hey, while you are on the site, it's absolutely crucial that you start a conversation with Edwin Duterte. As an XP commercial investment advisor, he is, without a doubt, one of the smartest investment analysts out there for small, local property owners in Southern California. Edwin isn't out here just giving generic cookie-cutter advice. He is taking the exact high-level financial frameworks used by major corporate real estate trusts and handing them directly to local San Pedro landlords so they can protect and actually monetize their dirt. I mean, just look at the sheer scale of this thing. $500 million. The West Harbor project is not just some nice community upgrade, it is a $500 million liquidity injection being pumped directly into the local market. When that much money drops into such a concentrated geographic area, it creates a massive financial shockwave. It's basically a mathematical certainty that this capital will aggressively reshape the entire economic ecosystem of the surrounding blocks. And this actually reveals a really stark divide between the amateur mindset and the institutional mindset. The amateur move, they're staring at the waterfront, waiting for the ribbon cutting, basically acting like a consumer. But the top-tier move, which is the exact strategy Edwin Duterte utilizes, is to completely ignore the water and aggressively reposition inland dirt on 6th Street, 7th Street, and Pacific Avenue. While the general public is just looking at the water, the really sophisticated players are looking at the gritty brick storefronts 3 blocks away. Which brings us to a pretty powerful reality check. If you're watching the water, you're missing the trade. Professional real estate syndicates are quietly executing this massive wealth-building playbook in land, literally right under the noses of legacy family landlords. They're weaponizing asymmetric information. Basically, they are hoping you stay emotionally attached to your historic building while they secretly treat it as a highly unoptimized, yield-generating asset. Now, a cynical landlord might say, come on, tourists aren't walking up to my empty storefront on Pacific Ave. But let's actually break down the micromechanics of this spillover. First off, the employee base. West Harbor is going to employ hundreds of workers who need a cheap lunch, haircuts, or groceries right nearby. Second, there's the vendor influx. All those waterfront businesses need local prep kitchens and storage spaces. And finally, parking overflows. Visitors are going to be forced into the municipal structures on 6th and 7th, meaning millions of people are about to bottleneck the downtown grid and walk right past your building. So how do you actually answer that big question we started with? How do you position yourself? Well, Edwin Duterte's valuation method completely flips the script here. Under a standard legacy valuation, mom and pop owners value their building based on their cost basis, what they originally paid for it. And they use these outdated modified gross leases. But a West Harbor optimized valuation shifts the focus entirely to yield, specifically net operating income, or NOI. It demands triple net leases, where the tenant actually pays the taxes, insurance, and maintenance. Shifting from emotional legacy underwriting to strict yield-based NOI radically increases the value of your property. Let's actually walk through Edwin Duterte's exact step-by-step method to manufacture this massive equity. Step 1, reject those wholesaler lowballs and stop letting predators price your dirt. Just say no. Step 2, shift your entire focus to yield and NOI, like we just talked about. Step 3, secure NNN regional tenants. You really want premium, creditworthy tenants who are going to take on the building's expenses. And finally, Step 4, execute a 1031 exchange. This right here is the blueprint to leverage the waterfront transformation to your absolute maximum advantage. Now, because of everything we've covered, this creates a massive valuation gap. And honestly, it's exactly where legacy owners bleed capital. Out-of-town syndicates are going to come to you and offer a fast, all-cash deal. And sure, it sounds great, until you realize it's actually 30 to 40% below what your dirt will very soon be worth. Because they know all about the spillover effect, they're basically betting that you don't. They are literally trying to steal your unrealized equity before the market fully prices in that West Harbor premium. And that brings us to a huge pitfall you have to avoid: the leasing discount trap. Right now, a lot of downtown landlords with vacant storefronts are totally panicking over high interest rates, and they're signing weak, 10-year legacy leases just to get a warm body in the door. Please don't do this. With over 2,000 new residential units delivering in the core, premium regional boutique tenants are going to actively fight for submarket space just to escape those crazy waterfront rents. You have to hold your ground for those higher triple net terms. Now, what if you're just tired? Maybe you want to exit the daily headaches of property management, but you are absolutely terrified of LA County's brutal capital gains taxes. This is where Edwin Uteri's expertise really, truly shines. Enter the 1031 exchange. This is an institutional exit vehicle that allows you to trade your high-maintenance historic building for a fully passive, single-tenant corporate NNN property anywhere in the entire country. You get to defer the taxes, completely erase your management tasks, and preserve 100% of your generational wealth. It's a game changer. Listen, you have to stop underwriting your building like it's still 2015. The market has completely shifted, and you need to shift right along with it. I strongly urge you to go to toptiercommercial.com and download the downtown San Pedro West Harbor Spillover Valuation Matrix. Once you punch in your address, start a direct conversation with Edwin Uteri. You need to get the insider knowledge that Wall Street uses so you can optimize your local assets on a perfectly even playing field. I want to leave you with this final provocative thought. Will you let institutional buyers quietly steal your unrealized equity? Or will you take control and leverage this massive spillover to solidify your generational wealth today? In a local market that's transitioning this fast, doing nothing isn't playing it safe. It's an active, daily loss of your capital. The real upside is inland. Make absolutely sure you capture it. Head over to toptiercommercial.com right now and let's get to work.